remembered late, but let me record anyway. So retailer utasema purchase of products still buying from the wholesaler. Again, you do the same thing. The invoice price is 3,063 or 3,063,125, but you separate the VAT from the cost. So the purchase of the product you put here 2640.625, then add additional cost because the retailer is not going to incur conversion costs. So here maybe they've incurred transportation, labor, storage, just like the wholesaler. So 25% of this value, 2640.625, we get 25%, and that is 660.156. Now you add that. And you get this 3,300.781. Then to the total cost, even the retailer must add his markup. So markup. So markup would be at 30%. So 30% your markup. So tunaongeza hapa 990.234. Akiongeza markup atapata the retail price. His retail price, you add 3,300.781, and you get 291.015. Then again, on the retail price, they must charge VAT. So VAT at 16%. So we charge 16%, which is 686.562. You charge VAT, you get the final value of the goods. The final value of the goods is going to be 977.577. Then what VAT does the retailer collect for the government? You pick output tax in this. The formula output tax minus input tax is 6.562. Then you say less input VAT. So input VAT is what they paid in the invoice price, which was 422.5. And that would be the VAT collected by the. There's one I did not put. Well, it's the VAT collected by the wholesaler, but I can squeeze it here. In the output tax, 422.5. I was supposed to deduct the input tax by the retailer. I hope I can squeeze it here. Mko na shindo imetoshaje kwa hiyo space namna hiyo. So let's input VAT. So the input VAT for the wholesaler ni 260. So na subtract hapa to 60. So hiyo ndio yeye collect 162 with 5. Yeah, una subtract hapa unabakisha 162.5. Sasa na huyu itakuwa 686 0.562 minus 422.5 na VAT inakuwa 264.062. So finally we can have a summary of the total VAT collected by the government in, along the production and distribution chain. So total VAT collected. So kutakuwa na supplier will collect 160 in thousands of shillings. Supplier collected 160. Then kukawa na manufacturer collected 100. Is that visible? No. Manufacturer can collect 100. Then kukaja nani? Wholesaler can collect 162. Finally, the last stage near retailer, now I collect 264.062. This is the total amount collected by the government, from the government by these traders. So the total amount is 686. So what lessons do we learn from here? A few lessons: that VAT is a multi-stage tax. So it's charged on various stages. Like here, there are 4 stages, and each stage, the traders are collecting tax. So being multi-stage means it's very productive. Unlike the tax it replaced was called sales tax. Sales tax was levied at only one point, maybe at the manufacturers, by the manufacturers only. So it meant its productivity was very limited. It collected very little revenue. Then secondly, this tax is paid by the end user or consumer. Our traders are simply agents and collect from the consumer or end user and submit. So these traders only account for the VAT, they don't pay themselves. So the supplier will make sure the amount in his invoice of 1,160,000 inalipwa na manufacturer, who is the customer. So these are simply agents. And then finally, it's still possible that there could be evasion of tax. How is tax evaded? Some of the traders might not record everything, so the government cannot get 100%. But even if there is evasion, VAT is better than sales tax, most definitely, because of the many stages. Usually, tax is evaded by retailers at the last stage now. Okay, but even if there was little evasion, the government has 3 other stages to collect, so the amount of revenue lost is minimum. So those are some of the conclusions we can make for this illustration, and then we can look at illustration. So let's make some conclusions on this. We'll make some conclusions on the illustration. So you can put an NB, just call it NB, and you say the illustration above demonstrates, that you put a colon, The illustration above demonstrates that. Column A. A, it is the end user. It is the end user or consumer who bears the burden of tax. It is the end user or consumer who bears the burden of tax. It is the end user or consumer who bears the burden of tax. The participants in the production and distribution chain, the participants in the production and distribution chain, the participants in the production and distribution chain are simply the collection agents, of the government, are simply the collection agents of the government, Second matter, the second conclusion, B, it also shows that in case there is tax evasion, the loss of revenue by the government is minimized. It also shows that in case there is tax evasion, the loss of revenue by the government is minimized. It also shows that in case there is tax evasion, the loss of revenue by the government is minimized. So that's what we can conclude from that. Very well. So now we look at matters registration. So next, subheading, you put registration. Actually, registration for VAT. Then you say compulsory registration applies. Compulsory registration applies to any person. Compulsory registration applies to any person who in the course of his business, compulsory registration applies to any person who in the course of his business has supplied taxable goods or services, the value of which is 5 million shillings, the value of which is 5 million shillings or more. The value of which is 5 million shillings or more. The value of which is 5 million shillings or more in a period of 12 months. The value of which is 5 million shillings or more in a period of 12 months. Next point, any person who meets the above conditions, is a taxable person. Any person who meets the above conditions is a taxable person, and should within 30 days of becoming a taxable person, apply for registration. Next point, voluntary registration is also permissible. Voluntary registration is also permissible under the law. Voluntary registration is also permissible under the law Voluntary registration is also permissible under the law, but shall be granted at the discretion of the commissioner, but shall be granted at the discretion of the commissioner, but shall be granted at the discretion of the commissioner. Finally, say, every registered person shall be required to display. Every registered person shall be required to display the registration certificate. Every registered person shall be required to display the registration certificate in a clearly visible place. In a clearly visible place. In a clearly visible place. In a clearly visible place in his business premises. In a clearly visible place in his business premises. Then you look at the registration. The registration is the opposite of registration. So the registration then you say where the value of the taxable turnover, where the value of the taxable turnover does not exceed, where the value of the taxable turnover does not exceed 5 million shillings. Where the value of the taxable turnover does not exceed 5 million shillings in any period of 12 months. Where the value of taxable turnover does not exceed 5 million shillings in any period of 12 months. A registered person may apply for the registration. A registered person may apply for the registration. A registered person may apply for the registration and will be subject to turnover tax. And will be subject to turnover tax. And will be subject to turnover tax upon notifying. And will be subject to turnover tax upon notifying the commissioner. And should be shall be subject to turnover tax upon notifying the commissioner. A person applying for the registration, a person applying for the registration, a person applying for the registration must notify the commissioner. A person applying for the registration must notify the commissioner of the value, must notify the commissioner of the value of his supplies, of the value of his supplies in the relevant periods, of the value of his supplies in the relevant periods, of the value of his supplies in the relevant period, and the description and value of taxable materials, and the description and value of taxable materials, and the description and value of taxable materials, and other goods in stock, and the description and value of taxable materials, and other goods in stock, and the description of value, the description and value of taxable materials and other goods in stock. Next point, if the commissioner is satisfied, if the commissioner is satisfied that the person should be deregistered, if the commissioner is satisfied that the person should be deregistered, If the commissioner is satisfied that the person should be deregistered, he will do so from the date. He will do so from the date. He will do so from the date when that person pays the tax due. He will do so from the date when that person pays the tax due. He will do so from the date when that person pays the tax due in respect of goods and materials. He will do so from the date when that person pays the tax due in respect of goods and materials, in respect of goods and materials on which tax has not been paid, in respect of goods and materials on which tax has not been paid, in respect of goods and materials on which tax has not been paid, or input tax has been claimed, or input tax has been claimed, or input tax has been claimed. Hey, then we also look at changes affecting registration. So what changes will affect registration? So changes affecting registration. So changes affecting registration. Changes affecting registration. So there are some changes which the commissioner must be informed immediately or within 14 days when they happen to the business, because they'll directly affect the registration. So you say a registered person is required. A registered person is required. A registered person is required to notify details. A registered person is required to notify details to the commissioner. A registered person is required to notify details to the commissioner within 14 days of the following changes. 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 A, change of address of the place of business. 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 B, additional premises which would be used. Additional premises which would be used. Additional premises which would be used for the purpose of the business. Additional premises which would be used for the purpose of the business. Additional premises which would be used for the purpose of the business. C, where premises that were used for the business, where premises that were used for the business, where premises that were used for the business cease to be so used, cease to be so used, cease to be so used. D, the business or trading name is changed. The business or trading name is changed. The business or trading name is changed. Then E, an interest of more than 30% of the share capital, an interest of more than 30% of the share capital, an interest of more than 30% of the share capital of a limited company. An interest of more than 30% of the share capital of a limited company has been acquired by a person. Has been acquired by a person or group has been acquired by a person or group. E, how many F? The person authorized to sign returns. The person authorized to sign returns is changed. The person authorized to sign returns is changed. The person authorized to sign returns is changed. Then G, the partners in a partnership. The partners in a partnership are changed. The partners in a partnership are changed. The partners in a partnership are changed. And lastly, H, a change occurs in the trade classification. A change occurs in the trade classification. A change occurs in the trade classification of the goods or services supplied. A change occurs in the trade classification of the goods or services supplied. Then I want to give you a little question to try based on what we did here. And then we can introduce the VAT account. So please turn to December 2021. This is pilot paper. December 2021 pilot paper. Look at question 5B. It's called BITEC. December 2021. It's on page 20. December 2021, question 5B is on page 20. It's called BITEC Limited or BITEC Limited. So I want you to try that. Use this format. Try and get the VAT payable. They're asking for the VAT payable from the above transactions. Use a VAT rate of 16%. They've really given you a custom duty rate of 35%. Jaribu hiyo. Yes. To be 16%. When the new things are trade costs. In which term? See the cost of transportation. Yeah, and the cost of importation. So we have Pata ngapi? Online VAT payable ni ngapi? Nani ako na answer? Na nani wako hapa online tuwaite? Beryl na Tracy. Abdi ametoroka. Abdi alikuwa hapa. So we'll read the question. Hii ni December 2021. Hii ni question 5. Inaitwa Biotech or VTech. So the question reads, Biotech Limited is registered for VAT. In May 2021, the company imported goods costing 2,600,000, excluding freight charges. The company then incurred 400,000 to transport the goods from the port to its warehouse. The conversion costs were 25% of the relevant costs incurred up to the point of processing. The goods were subsequently sold at a profit margin of 33.5%. Required VAT payable on the above transaction use a VAT rate of 16%. So we have value of imports in the 2,600,000. The value of imports. The imported goods is 2,600,000. The first thing when you import goods is you charge duty. The rate of duty has been given at the end. Unasema VAT payable on the above transactions use a VAT rate of 16% and a customs duty rate of 25%. So the first thing we want to charge is customs, but before we charge customs, wanasema the value of imports will exclude freight. Freight is transportation from the country up to here, the port here. So you have to include freight kwanza. So itaongeza freight was part of the value of the goods. Lazima uongeze 180. Hiyo ni freight. So by the time the goods now pick up on the port, the value is 2780 plus freight. The first thing you charge is the duty. So customs duty, the charge at 25%. To get 25% of 2780. So that will be our customs. So 2780. Unapata 695. Unaongeza na hiyo 2780. So hii 3475 hii ndio inaitwa value for VAT. So value for VAT includes customs when you import goods. So ukitafuta input tax utatumia 3475. Hapo baadaye so tunaendelea. So goods sasa zimefika port, washa charge customs, so wanataka kuzi transport. Wanasema the relevant cost, okay, the company then incurred 400 to transport the goods. So you add transport here. It's 400. Transport need 400 to transport the goods from the port to its warehouse. The conversion costs. So by the time goods now pick a warehouse, the cost is 3875. So then when I incur conversion. So conversion is labor, maybe overheads, and so on. And so conversion is about 25%. So 25% of the costs up to that point. So tunachukua 3875 times 25%. 25% is 968.75 conversion. So now add, and you get 48, 43.75, add conversion. Sasa hii ndio total cost 48, 43.75, lakini wanakuambia hivi hawana markup, lakini wako na margin. Wanasema profit margin ilikuwa 33 and a part. So margin unajua ni profit on selling price. Huwezi kutumia profit on selling price. So convert from the conversion from markup to margin. Na tulisema generally kama markup as a fraction is 1/n, margin is 1/n plus 1. But now what we have is margin. 33 and a third of a fraction is a third. So markup is equal 1/3 minus 1, which is half. So our markup here is 50%. So markup ni half, ama ukipenda 50%. So tuna add markup at 0.5. So 0.5 itakuwa 24, 21.875. So ukiadd hiyo utapata selling price. So selling price of the goods itakuwa 72,65.625. Hiyo ni selling price. Sasa utacharge VAT on the selling price. So VAT at 16%. Itakuwa 11,62.5. So ukiadd VAT unapata the final value of the goods. The final value of the goods is 84. $28.125. Then we get the VAT payable, because that was the question. Hii ni output tax. Output tax ni 11,62.5. Then you lessen input VAT. Because that's the formula. VAT payable is output tax less input VAT. So input VAT is based on 34.75. The value for VAT. So 34.75 multiplied by 16%. Value for VAT. So input tax is 556. We subtract here and get the final VAT payable. So 606.5. Nilikataa kuniambia saa zenu. Nani alipata karibu na hapo 606? Sarah, ulipata anything close by? Na watu wa online. Sawa. Any question? Okay, so let's introduce the VAT account. So next I want to introduce the VAT account. The VAT account. So VAT account. So a few things you see, the VAT account is posted. The VAT account is posted. The VAT account is posted with the monthly totals. The VAT account is posted with the monthly totals. The VAT account is posted with the monthly totals. The total input tax is debited. The total input tax is debited to the account. The total input tax is debited to the account. And the total output tax is credited. And the total output tax is credited. The total input tax is debited to the account. And the total output tax is credited. If the debit side of the VAT account is greater, if the debit side of the VAT account is greater, if the debit side of the VAT account is greater than the credit side, if the debit side of the VAT account is greater than the debit side, the balance is a VAT refund. The balance is a VAT. If the debit side of the VAT account is greater than the credit side, the balance is a VAT refund which is carried forward. The balance is a VAT refund which is carried forward. The balance is a VAT refund which is carried forward to be offset. To be offset against the output tax. To be offset against the output tax of the following month. To be offset against the output tax of the following month. To be offset against the output tax of the following month. However, if the credit side, of the VAT account, if the credit side of the VAT account is greater, if the credit side of the VAT account is greater than the debit side, if the credit side of the VAT account is greater than the debit side, the balance is the VAT payable. The balance is the VAT payable to the Revenue Authority. The balance is the VAT payable to the Revenue Authority. The balance is the VAT payable to the Revenue Authority by the 20th day. By the 20th day. By the 20th day of the following month. By the 20th day of the following month. You see, the VAT account is entered as follows, or is completed as follows. The VAT account is completed as follows. So we want to put some entries in the VAT account. The VAT account is completed as follows. So let's make some entries in the VAT account. So we make a few entries. You make purchases, you will debit. input tax. So you bought purchases by cash. So these are purchases. What you debit is VAT on purchases. Be a debit like that, or you make sales by card. You import goods. VAT on imports will also be a debit. You export goods. Now exports are zero retail. So multiply by 0%. So you just get 0. Exports are zero retail. See you have sales returns. So VAT on returns. For your purchase returns. See your bad debts. Just a few entries. I include the T account. If the credit side is more, you know, the VAT payable. So that will be a balance. If the credit side is more, then you have a refund. Down, so you bring forward the VAT refund. Then there's a question we can look at in November 2019. November 2019 is page 43. There's a question in November 2019. In question number, I think question 2. Question 2, November 2019, question 2 is on page 42. November 2019, question 2 is on page 42. Let's start with the theory. There's some nice theory there. It's on page 42. But it says, identify 3 ad hoc committees that a county procuring entity could establish to ensure that procurement and asset disposal is done in accordance with the county government procurement regulations. Wanasema ad hoc committees kwa sababu These committees are only formed when there's procurement from among staff, but they are not permanent committees. So which committees are these for procurement and asset disposal? The committees come again. Can you remember any? Wanasema just identify them. You don't even need to explain anything. These committees they come again. Committees come again. Wanasema tu you identify. They come again. Tender opening committee. You remember a committee like that? Tender opening committee. Another committee ni kama gani? Evaluation committee. Evaluation committee. Another committee ni kama gani? Inspection, negotiation committee. Alafu kuna inspection and acceptance. Inspection and acceptance committee, the one that accepts the goods. Then kuna disposal, because they wanted both procurement and disposal. Those are the committees. This says, discuss 5 roles of the National Treasury in relation to procurement and asset disposal as outlined in the Public Procurement and Asset Disposal Act. So the role of the National Treasury is that of policy, yeah? But since you have them in the notes, you can get them from, It's that of policy making, like recommendation of a system for public procurement for national and county government, okay, doing research, continued research on the system of procurement, recommending, recommending a procurement system based on not IT, what was the word? Not virtual. So most of the work of the National Treasury is policy, policy and advice to the national and county government on what system of procurement and asset disposal to use, maybe to review the current system and so on. But those are all in your notes. So the most interest is on part C. The following summaries of the details of the sales daybook. These are records, purchases daybook and the cash book of Kamata Limited for the month of December. So they've given us details of these daybooks. Sales daybook, they made sales to Mwangaza Limited, J. Kamau, Hazina Enterprises, these are exports, Ministry of Sports. Purchases daybook, they bought from suppliers, Jawabu Enterprise, Sonitech Limited, these are imports, N. Kaluma, B. Salama. Cash book, you have sales, receipts from debtors, salaries and wages, catering expenses, purchases, furniture, electricity, photocopying, refund to customers, balance carried down. Additional information, J. Kamau was declared bankrupt on 18 December after having paid 400,000 for the goods purchased on 7th of December. 10% of the purchases from Jawabu Enterprises were returned by the company due to poor quality. 3, credit notes amounting to 280,000 were issued to customers during the month. They found the customers in the cash book relates to the excess amounts paid on cash sales. The purchase invoice of 220,000 from Dubai traders was omitted from the purchases. They book all the transactions are exclusive of VAT at the standard rate of 16% required. Prepare a VAT account for the month of December. They'll prepare a VAT account. So this is C part. The company is called Kamata. Inaitwa Kamata Limited. We are preparing a VAT account. All the dates are for the month of December. And indeed, we'll follow the dates in the order. For example, the very first date, if I look there, is December the 1st. And on December the 1st, they made a purchase from a supplier naitwa Jawabu Enterprise. So you debit that on your VAT account, December the 1st. Nasema Jawabu Enterprise. And this is a purchase. The value is 300,000. Transactions, you unaambiwa transaction note 6. All the above transactions are exclusive of VAT, so they are not inclusive. So because they're exclusive, we'll be multiplying by 16%, and we get 48,000. 48,000 will be a debit. So that will be our first entry. $48,000. That's December the 1st. We don't have any other 1st of December, so we move to 2nd of December. 2nd of December appears in the cash book on the credit side, and the entry there is salaries and wages. Salaries and wages are not subject to VAT. Those are not services that are subject to VAT, so there is no entry for December 2nd. The next date after December 2nd appears to be December the 4th. Now, December the 4th has two dates. The first one is in the sales day book, and then the other one is on cash book on the credit side. So we start with the entry in the cash book. So the cash book entry on December 4th is catering expenses. Now, catering expenses, sometimes the examiner can call them restaurant services, are prohibited from claiming as input tax. What that means, even though you will incur them, you might take your workers to a hotel, or you might buy things from a restaurant and you pay VAT, you will just pay, but you cannot claim as part of your input tax. It's one of the prohibited supplies, including I think VAT on fuel also you cannot claim. So those are some of the prohibited claims as far as VAT is concerned under the VAT regulations. So hiyo 4th ya catering unaignore, but kuna December 4th ingine kwa sales day book waliuzia kampuni inaitwa Mwangaza. You come here and say 4. They make a sale to Mwangaza. And the sale to Mwangaza is exclusive of VAT. It will be 650,000. So we multiply by 16%. It's exclusive of VAT. na tunapata ngapi hapo? 104,000. So 104,000 tuna credit hapa. So tumemalizana na December 4, tunaenda kwa December tarehe 5. Zote ziko kwa cash book, kuna sale debit na kuna purchases on the credit side. So sale debit kuna entries mbili, kuna cash na kuna bank. So tuta add to because yote ni sales 960,000 plus 450,000 and then tutatafutia VAT. So 960 tuta add na hiyo 450. So we get 1410,000. Hiyo ni sales and then unakuja hapa tuna make entry. Nasema tarehe 5 kuna sales. So 1410,000 exclusive of VAT multiplied by 16%. So napata 225,600, so we credit 225,600. Then kuna another tarehe 5 on the credit side, na hiyo ni purchases. Again we can add 580, to add hiyo 580 ni cash, plus hiyo ingine credit ni 640, add, and we get a total of 1220. To come here and debit tarehe 5, kuna purchases. So 1220 multiplied by 16%. They are all exclusive of VAT, so we multiply by 16% and we get 195,200. So I think we are done with 5th. There is no other 5th date there. So the next date is date 6. And date 6 iko kwa debit, kwa purchases the book. So we buy from N Kaluma. So date 6. So we use N Kaluma. N Kaluma, and the value of purchases is 200,000. So 200,000 is exclusive of VAT. So we multiply by 16%, that would be 32,000. So that would be a debit. You need date 6. Na hakuna date 6 ingine. So that is done. Then you go to date 7. Date 7 ni mbili. Oh, jina imebadilika. Ni Sonitech na ni actually import. Sorry for that. So date 6 ni Sonitech. Na wameimport goods. Date 6, the value of imports is 420,000. Tutasema 420. Hawajatupatia duty. Kama wangepatia customs duty, the first thing tungefanya ni tungecharge customs, alafu ndio tucharge VAT. Hawajatupatia customs, so you just multiply by 16% for Sonitech to 420. So 67,200 with debit. You need date 6. Then the next date after 6, date 6 ni moja, ni date 7. Date 7 ni mbili. Kuna sales day book na kuna cash book. Tutaanza na cash book. On the credit kuna furniture. Sasa furniture is not for furtherance of business because furniture ni fixed asset unless we ni muuzaji wa furniture. So biashara yako ni kununua furniture na kuuza. So this was not incurred in the course of business. So you una ignore because furniture is a fixed asset. It's not for sale. It's not for furtherance of business. Then you go to sales day book. Kuna J Kamau wanamuuzia. Tunakuja hapo na record on 7. J Kamau. They sell to J Kamau. The value of sale to J Kamau is 520,000. 520,000 we multiply by 16%. So 83,200 would be our VAT. So we put that. So we are done with 7. So the next date in order should be date 9. Now date 9 is in the cash book. And apparently we only have one date 9. It's talking about payment of electricity bill. So electricity bill is subject to VAT. So tutakuja hapa date 9, kuna debit, electricity. So itakuwa 32,000, it is subject to VAT of 16%. And you get 5,120. So that's electricity for date 9. The next date after 9 should be 12. Sasa tarehe 12 ni moja na iko kwa purchases deed book. I think ndio hiyo ya Kaluma 200,000. So you come here and say 12 and Kaluma. So it's a purchase 200,000 times 16%. Now that's 32,000. So we debit. We debit 32,000. That's date 12. We don't have any other date 12. So we look for the next date should be 14. Now 14 kuna mbili. Kuna sale day book na kuna photocopying of the cash book. Tutaanza na cash book. Photocopying will debit here. Photocopying. Photocopying is a vatable service. So the value of photocopying is 24,000. So 24,000, we get VAT 16%. So 3,800. 3,800 for photocopying. Then there is another 14. Huh? Oh, mingi napata tu vitu zangu. 840 unasema? 3840. 3840. Sawa sawa. 3840. Hiyo ni 14. Sasa the other 14 ni sale to Hazina Enterprises, na hiyo ni export, so it will be 0 rated. The other 14, tasema Hazina Enterprises, lakini hiyo ni export. So 0 rated, and we are done with 14. The next date should be 15, and you get 15 from the debit of the cash book. They got receipts from debtors. They got payment. Sasa hiyo receipts from debtors cannot be entered. Kwa sababu gani? The goods were entered as sales were being made. Wakati goods naenda, you've already entered in the VAT account. So when you receive money, you cannot enter again. That will be double counting. You don't enter when you receive money. You enter when a sale is paid, whether it's credit or cash. So hizo entries zilishafanywa. So 15 hakuna entry, that was already done. So after 15, I think the next date is 20th. And that's a sale to the Ministry of Sport. So come here and say 20th. Ministry of Sports. So Ministry of Sports, 170,000. We'll deal with that shortly. So 160, 170, we get 16% of that.
In additional information,
so what's to move for additional information after we make this entry? We'll deal with all matters in additional information. Right. So unit 20. Then you look at additional information. Note 1 inasema J. Kamau was declared bankrupt. J. Kamau was our customer. We sold to him on 7. Tulimuuzia goods valued at 520,000. So he was declared bankrupt on 18 after having paid only 400. So 400 na tulimuuzia 520, inaonekana 120 haitapatikana. Kwa sasa amekuwa declared bankrupt, so we can claim the VAT on the 120 as a bad debt relief. Okay, so I'll debit here 18 J. Kamau. In VAT on the bad debt, so it would be 120,000 the balance, we multiply by 16%. $19,200 is debited here. The next item, note 2 in additional information, 10% of the purchases from Jawabu Enterprises were returned by the company due to poor quality. So Jawabu is our supplier on date 1. Jawabu Enterprises supplied 300,000. So 10% were returned. They don't give us any date. So let's say Jawabu Enterprises for returns. Jawabu Enterprises. So when we share 10%, which is 30,000 times 16%. Nafikiri ni 4,200, but we can confirm 4,800. Unit Jawabu, then 3 credit notes amounting to 280,000 were issued to customers during the month. So customers walipewa credit note, maana yake walikuwa wamerudisha sales. Kirudisha sales unapewa credit note kwa sababu umerudisha bidhaa. So you'll debit credit notes issued to customers. Credit notes issued. Now the value of credit notes issued to customers is 280. So VAT 280,000 you multiply by 16%. We will debit that. So 44,800 is debited for credit notes issued to customers. Then note 4, refunds to the customers in the cash book released to the excess amounts paid on cash sales. We deal with that when we go back to the cash book. Note 5, a purchase invoice of 220,000 from a supplier called Dubai Traders was omitted on the purchases label. So we'll include it, purchases from Dubai Traders. Kuna purchase ambayo was omitted. So you include it, 220,000. We multiply by 16%. Purchase from Dubai Traders. That's 35,200. So we are done with additional information. So we had reached the 20. So we go to the next date. After date 20, we have date 22nd. 22nd is now the refund. It's on the credit side of the cash book. The total amount refunded to customers for overpayment is that 176,000. So you get VAT on the refund. Refunds, so it will be 176,000. So this was excess payment. The amount was refunded to customers. So 28,000. 160. That's refunds. That's 28. Then the next date should be, 22nd. The next date should be 27. On the purchases day book, they purchased from B Salama for 180,000. So 27, B Salama. B Salama is 180,000. $28,800. So debit here 28,800. Tumemaliza because sasa ile 30th ni balances za ni balance remaining ya cash flow. Sasa mimi naona debit itakuwa more, but you can find out. So you add everything. You balance off the T account by adding. So ukipata refund, utaandika hapa VAT refund, carry down. Hiyo ni December, utasema hapa January the 1st. Utasema VAT refund, brought down. So just add and get the balance. Digit 507, 520. Balance is 62, 720. So bring it here, 62, 720, and we are done. So next we'll be looking at classification, not today, in the next class. Classification of supplies. For VAT purposes. looking at classification that supplies community purposes. So asanteni sana na muwe na siku njema. In the next class we'll look at classification. I think that's one of the last things in BET. Unasema? Si saa zile tu tutakutana hata kama ni, lakini wakati wa asubuhi it was possible to have a class. I don't know why it was cancelled. Me, I was willing to come and teach. At least the early morning they go. Early morning ni mapema sana. Hakujachemka. Unaweza kufanya 1-2. So me actually I was willing to come, but wakati walisema wame cancel, there's nothing I could do.
No, they say that letter communicate.
Walisema unless you want to teach from home, you communicate. Kama nilikuwa nataka kufundisha from home, niseme. Hawakupeana option ya kuja hapa. Sasa unajua asubuhi sana, hakuna shida.
So
next time you just come early, finish, go back home. Asubuhi hata hakuna mtu. Saa tano niko nyumbani kwa TV. That's what I thought. Until Monday na Thursday. For real. Monday is the transition. Oh, the class. Yeah, so I think kama kuna arrangements, we just come early, have the class and go back.